Reid Hoffman once said, if you're not embarrassed by the first launch of your product, you launch too late.
What should the startup do from day one?
So this is a mistake that first-time founders make more often. Second-time founders tend to be ahead of the game. They're talking to customers before they've even built anything. So you need to be talking to your customers from day one. You need to be learning from your customers from day one.
Do you look for startups who have already got customers? Or is it okay if they have not got the customer, but their vision and the idea is super solid and their team is really good at the core?
So here's the misconception that I think a lot of people have. You don't build a product for your customers. You build a product with your customers. Team is everything. When we're investing so early, a great team will be able to iterate quickly. They'll be able to learn quickly. They'll be able to find the market opportunity.
Do you believe in this phrase, sell before you build?
Yes, 100%. He said, you know what? It just never gets easier. The whole thing was hard. Every single piece it just kept getting harder. And that's the reality of the startup journey. It's like, yeah, you get to a point where you're like, you climb the mountain, you can take a deep breath. If you think that you made it, it's over. That's the beginning of the end.
What's happening, folks? Thanks a lot for tuning in to the Altered Perception Show. Today we have Pablo Casilimus joining with us from OneSixOne Ventures. He's the managing partner over there and he co-founded with Justice. I'm super excited for this one because we have been working and we have been talking about a lot of talks about the startups and how people are starting up their own startups in the show. But from the VC perspective, I have not covered anything. And I'm super excited to learn about what it takes to be a VC and what's the day-to-day like and what type of startups do VCs typically prefer. So without further ado, Pablo, thanks a lot for joining the show.
Thank you for having me, Gaurav. Excited to do it.
Yeah. Let's start with OneSixOne. So you are the managing partner over there. Take us to the history of how you guys started.
Absolutely. Yeah. I grew up in Miami. My parents are both immigrants. And like most immigrant parents, they wanted job security for their kids. So they wanted me to be a doctor, a lawyer, an engineer. And of course, I did the complete opposite. I dropped out of college. I started a marketing company. And while I was building that, I was looking for mentorship. I was looking for people to advise me. I was looking for investors. And there wasn't really an ecosystem. This is Florida, back about 10 years ago. And so I got together with a couple buddies. They were all students as well, trying to build their first companies. And we started hosting events. And then the events ended up turning into an accelerator. And then the accelerator ended up turning into a fund. And then today we're managing $4.5 million. We've made 28 investments. And actually the last piece that's important is our core differentiator as a fund today is that we host highly curated programs and events all over the US. And that's actually how we get our deal flow as a fund. But more importantly, that's how we help our portfolio companies get in front of customers and help them raise more money as well. So that's the OneSixOne story.
I like it. Short and sweet, but at the same time tells you everything about OneSixOne. So you guys started with events, like hosting events.
Yeah.
Was that like startup events or just like general events and organizing for like networking?
Yeah, the first year and a half of events, it was literally in our friend's backyard. He was also a student and we would have a bonfire and we'd have some beer and we'd get some pizzas and we'd sit around the bonfire and talk about ideas. And that's how it started. And then after a year and a half of hosting events, we got access to a very unique venue. It was this really nice penthouse overlooking the stadium and all of University of Florida. And then all of a sudden, people who never responded to our emails all RSVP'd and said, hey, I've never seen that place. I want to go check it out. Yeah. And next thing you know, we got featured on a blog and started getting exposure. Investors, city commissioners started showing up. And we built up a really good tech community. And then February of 2020, we announced at our monthly event, hey, we're going to start having a membership dues. This is going to allow us to have a bigger budget so we can do better events and raise the bar. And a few months later, the whole world shut down.
I was about to say that was the time when, March was the time when COVID hit, right?
Exactly. So yeah, literally that was our last event we ever hosted. We had 2 events we were planning in March and we had to cancel them. And while that was happening, I like went scrambling. I launched a podcast and we ran that for 2 months. And then we ultimately just turned it into an accelerator.
I want to cover a little bit on 161 and then I want to talk about your podcast journey too. But talk about the 161. So you guys are managing early startup, I'm assuming, or is that like portfolio can be diverse?
We're investing really early, yeah.
Yeah.
Pre-seed and seed primarily.
Gotcha. Okay. And so you said you have 28 million in your portfolio right now?
No, we have 4.5 million.
Okay,
we have 28 portfolio companies.
28 portfolio companies. Cool.
Yeah.
And like, are they all in different industries, or are we talking about like specific tech industry?
Yeah, they're pretty scattered. We have like a lot of cloud and AI infrastructure, and then we have a lot of like dual use tech, like government, defense tech. But the rest are kind of like vertical software solutions and like AI applications and stuff like that.
Yeah. Anyone, like, I know that you should not differentiate between anyone, but like, what are you most excited in terms of like benefiting the people and like going away from the actual B2B side?
Oh, going away from B2B. Okay, so the consumer. So yeah, I
Yes.
could talk about a few. We have a company in the portfolio called Bookster. And they're taking a vice, which is, you know, many people are addicted to like gambling. And for many reasons, it's a very addicting thing. And people want to keep, you know, betting or playing cards, whatever it is. They're taking addiction to a vice like gambling and turning that into a positive education. And so it's a consumer education platform called Bookster. And essentially what happens is you do these book summaries. They're about 15 minutes. When you're done, you take a quiz. If you get the quiz questions right, you get these tokens. And then you can play social casino games with your friends with those tokens. Now, where this turns into a skill-based game instead of a luck-based game, if it was a luck-based game, it'd be regulated like a casino.
Right.
But because it's skill-based, what they do is they sprinkle in questions about the books that you've read. So it's a way, they say one of the best ways to retain information is to test on it, right?
Yeah.
So that's the whole idea there, is they're taking something, you know, addictive, turning it positive. We have another one called Neurotone AI, which is actually helping people who have, I believe it's called tinnitus. Tinnitus, yeah, people who have like hearing issues.
Right.
And they basically have a technology that's basically was invented originally by the one of the top audiologists and researchers in the world, and they spun it into the startup called Neurotone AI. And they're already working with like the VA hospital and like, which is like the largest servicer for people who have hearing aid or hearing problems. One of the issues that they don't talk about enough about people who have hearing issues is when you get a hearing aid, you have to, in a way, relearn how to listen and how to process that information in real time.
Yeah.
And that's what their system is focused on. And we just got an update today. I don't know if I can share it publicly, so I'm not going to talk about numbers or anything, but like they're crushing it.
That's awesome. That's awesome. Well, I can say from my perspective, I used to make music and I used to also like mix and master, and that art requires you to like be very keen. Your ears should be like developed super well so that you can, you know, differentiate like where is quality and where is not, where is just the noise, and you gotta cut down the frequency. So you have to like boost a lot of frequencies, which like creates a lot of trouble to hearing. So a lot of people who are musicians, you will find them, they have some sort of like hearing issues, and a lot of them have tinnitus. And you know, especially when like they're just done recording, so like for few hours it's gonna linger.
It's just ringing.
It's just a constant ringing. The only trick that I, over the past like 6-7 years of doing music, the only thing that somebody taught me and who's been doing for like 25 years is that lower the volume of like once you have the mix, just lower it so that you can barely hear it, and then make out the sound. That's the only way you can avoid tinnitus, at the same time improve the quality of mix. But that's something that not a lot of people know. Like 90% of the people don't know. So that's why like a lot of people, once you start having the hearing issues, that you cannot go back. That's not gonna, you know, improve. Like you can just like avoid making music or what, but you if you are in the music industry and you want to have a long career, you know, once it starts developing, it doesn't go back, right? So for them, like this is super useful.
Absolutely. And they say actually like I believe it's like a third of people who get hearing aids, they return them because they never actually are able to take full advantage of it because they never fully relearn how to process that information in real time, how to listen properly.
Yeah.
And with this device, with the system that Neurotone has developed, they're decreasing the amount of returns by, it's like 80% or something like that. Like it's a very high number.
Wow.
People who do the trainings that Neurotone has developed, they are much more likely to get a benefit from the hearing aids and much less likely to return the hearing aids.
Yeah. So they are in the pre-seed round or seed round, right?
We invested in the seed round, and I would suspect that they're going to raise a Series A next year or something like that. If they need more capital, I don't know.
Yeah. Any other companies from the B2C
From the consumer side, there is a company called Clockout, and I love their mission. Basically, what Clockout is doing is they're allowing daily workers to be able to cash out their earnings as soon as they clock out. So, for example, you work at a grocery store, you work at a restaurant, you get off your shift, and let's say you need access to those funds because you have to pay the rent or you have to go get groceries. You know, most Americans are living paycheck to paycheck.
Yeah.
And they're giving Americans the access to those funds immediately. As soon as they don't have to wait 2 weeks to get a paycheck, you could literally go into your the vision is one day you'll go into your Wells Fargo or Chase app or whatever your bank is, and you'll be able to pull out $200, $300 or $500, whatever you need, and just pay a small fee instead of going to these predatory check cashing places or like short-term payday loans and paying like exorbitant rates, like 30% just for like a 2-week period or whatever it is.
Yeah.
So yeah, that's what Clockout is doing. And they're the first company that's partnering with financial institutions to enable this directly through the banking apps.
That's crazy.
For consumers. So.
Oh, I think that's a great idea. I mean, as you said, like a lot of percentage in US, like people just rely on paycheck to paycheck, and sometimes even they cannot, even if they have the paycheck, they don't have that much money to kind of pay the rent and all. So, and most of their money is going in rent, so they don't have that, like you said.
And then they have debt and stuff, and and we really like to bet on people. And these are founders. They're Venezuelan immigrants.
Yeah.
They've went to University of Florida. They dropped out to pursue this. They pivoted many times. We were tracking this company for 2 years before we invested.
Really?
And we were, keeping close in contact with the founders. And we finally, after they pivoted a couple times and we saw the speed that they were iterating and their grit and how resourceful they were being, because they hadn't raised a lot of money, but they were being very lean with the money they raised. And we said, this is a team that we want to bet on. And the mission of the company is so powerful.
Yeah.
And market timing is one of those things that you can't predict. But one thing that I see is, like we said, consumer debt is at an all-time high right now. And a lot of Americans are living paycheck to paycheck. And I think people need access to their funds more than ever today.
Yeah.
So.
Yeah. Let's dissect this even more. So you said that you have been tracking the company for last 2 years. So I wanted to ask you, how do you even research about these companies, and how, do they directly go into your portfolio? Is there a platform that you use? What's your research criteria? And also not just research criteria, what's your criteria to kind of select a particular startup that you want to invest in and kind of reach out and then go about?
Yeah, absolutely. So the way that we get most of our deal flow is actually through the events that we're hosting. So that's how we meet a lot of these founders. So like the founders of Clockout, we met them through some of the programs we were running at University of Florida. And it was, UF dropouts. So that's how we got connected there. In terms of who we invest in and how we choose that criteria, there's 3 main things that we look for. One is founder market fit. Why is this the best team in the world to build this product? 2, can they build and can they sell? And so typically it's 2 co-founders. So one technical, one non-technical.
Yeah.
It's rare that you have one person who's great at both of those. And then 3, are they incredibly resourceful? Are they executing very quickly? And can they do a lot with a little? Those are the 3 main things that we look for, especially early on. Sometimes there's not any metrics. We've invested pre-product even, which means obviously there's no revenue. And so we're really just betting on a team.
Wow. You summarized it well. And I have so many questions on that. So you said that you focus, and you also said that the startup that the fintech startup you said was also very lean. And so what do you mean by that? You said that they use less resources and produce more output, but like what goes in it? Like what's like the depth?
Yeah, great question. So we want to see like companies have what's called a burn rate. How much money after whatever they're making are they burning through every month, right? And in the case of Clockout, the founders in these early days, while they were trying to figure out that product market fit or where's going to be their wedge into the market, they were being so lean. And what I mean is they were living back home, so they weren't paying rent, They had gotten basically a free office through one of their like parents' friends' companies. They had like a small office in the back. They like got all the furniture for free and they were just working out of there every day. So their expenses were so low. They were taking such a modest salary, just to survive. And like, in the early stages of building a company, like if you're truly obsessed, if you truly want to change the world and disrupt the market or an industry, it's going to be so difficult. And you don't want to go into it burning hundreds of thousands of dollars before you even validate this idea or validate that there's a market for what you're trying to do. And so I think it's super important to get that validation and get some early traction before you start to put the fuel on the fire. I think this is a mistake that we see mostly with first-time founders is they tend to accelerate a little bit too quickly before they've actually figured out where is their wedge into the market, what is the value proposition, what is the problem they're solving, and who is that problem for. I think that's the key thing that needs to be figured out before you start to raise the burn rate.
So I want to cover on a bunch of these points that you talked about. You said wedge in the market. What is the wedge in the market?
So I think, so Peter Thiel, the co-founder of PayPal, early investor in Facebook, he has this idea that he says that competition is for losers and that the greatest companies are monopolies and they're based on secrets. And in a way, they're inventing a market, right? When you're starting a new startup, you're going to be taking somebody's market share. Maybe it's a little bit of a different approach. Maybe it's an outdated approach that they have. But ultimately, you're going to take their customers, right? But where do you start? That's what I mean when I say the wedge. You have to find some sliver of that market that has a bigger pain point than everybody else. These are your early adopters, right? These are people that they're in so much pain, they'll try anything. Have you ever heard somebody like, I've tried everything? Like, people who are going through a lot of pain or struggle or whatever it is. And those are the people that you want to go after first because they're going to pay you the money right away. They're already looking.
Do you look for startups who have already got customers? Or is it okay if they have not got the customer, but their vision and the idea is super solid and their team is really good at the core?
So here's the misconception that I think a lot of people have. You don't build a product for your customers. You build a product with your customers. This is how all startups get built, typically. I mean, it's very rare that you have another approach. But the way it works is you build an MVP, you put it in the hands of your customers, you interview them, you get data, and then you go back and you update and you iterate. And the best founders that I've found, they do this in a matter of days. The first-time founders that don't get too much traction, they tend to have longer, it's called a product iteration feedback loop. So they tend to have longer loops. It could be like a couple of months, in some cases even a year or more. That's bad.
Like this is their first startup. They don't know what exactly is the end goal, how to get there. Is that what it is? Or
well, it's because a startup is a hypothesis, right? You have a hypothesis that this audience has this problem and they're willing to pay this amount of money for this solution. Your hypothesis, 99.999% of the time, is going to be wrong. And the only way to validate and iterate and find a hypothesis that's correct is to be learning very quickly. And you learn from your customer. So that is the main problem that I think, and we see that a lot of times with like, when you see a founder that they've been doing something for years and they haven't really iterated much and they haven't gotten traction, it's almost painful to hear about this or to see that 3 years later, 5 years later, they're still doing the same thing and there's no traction there. Right?
So this question I wanted to ask later, but I'll ask now. Looking from the VC's perspective, what should the startup do? Whatever we talked about so far, based off of that, what should the startup do from day one? Forget about like, or wherever they are on that day. What should they do now so that they have a right path moving forward?
From day one, they should build an MVP in 1 hour or 2 hours, and they should launch immediately.
And what do you mean by MVP in 1 hour? Like, I mean, MVP can be so broad.
Yeah, of course. And it depends. If you're building hardware, that's different, right? That can be more difficult and take more time. But for software, you can build a landing page. You could literally go on lovable.dev, type in a couple prompts, and in 30 minutes, you could have an MVP or a landing page that somebody can go on, and you could have a prompt where they could put their email in if they want to learn more. And that's how you start to validate. You send it out, you post it. How many people signed up on your wait list? You know?
Yeah.
So this is a mistake that first-time founders make more often. Second-time founders tend to be ahead of the game. They're talking to customers before they've even built anything. So you need to be talking to your customers from day one.
Yeah.
You need to be learning from your customers from day one.
Right.
That's important.
So from the people who are day one starting right now, or day 300 but they are on the wrong track, start with an MVP. Have the MVP right. It doesn't matter. It doesn't have to be that fancy. Have it simple, and then reach out to the customer so that you can validate the hypothesis. Is that right?
Reid Hoffman once said, if you're not embarrassed by the first launch of your product, you launch too late. And I mean, it's absolutely true. When you look at the first iteration of DoorDash, it was called Palo Alto Delivery. They built it in 30 minutes. It was a landing page.
Yeah.
You couldn't order through the website. You had to call a number and order.
Mm-hmm.
And these guys launched it. And then a couple days later, they were on their way to get ice cream, and they got a call. And somebody was ordering on the website.
Yeah.
And they're like, okay, we'll get ice cream later. Let's go deliver this.
Yeah.
And they went and bought it themselves and delivered it.
Yeah.
Right? And then there's many examples of this. Like Airbnb, if you saw the first version of Airbnb, you couldn't pay online.
Yeah.
You had to literally walk up to the house, knock on the door, and pay with cash or a check. Think about how uncomfortable of an experience that is.
Yeah.
And weird, right?
Yeah, but still people did it.
So people did it. That shows that there's a demand.
That's
the other thing to think about. That's why you don't need a perfect product to start. In fact, it's better if you don't have a perfect product. Because it shows you, is the pain point big enough that people will go out of their way? They'll experience discomfort.
Yeah.
They'll pay extra money.
Yeah.
They'll go through the hassle to use your solution.
So what you're saying is that instead of focusing on the product, focus on the problem. What's the pain point? What's the issue that a user is facing?
Yeah.
And solve that. And that build MVP and all the product around it. Product comes way later. Is that right?
It's a never-ending cycle. It's not one or the other. You have product from day one, but your product needs to evolve every day.
Interesting. Okay.
Yeah.
Okay. And so basically, you said the phrase that learn with the customer. So you are like
build with the customer.
Build with the customer.
Yeah.
So you are like almost in their ears every single day, like trying to like iterate and
you should be talking to customers every single day. If you go 2 weeks without talking to a customer in the early days, I think you're doing things wrong.
Yeah.
I mean, you need to be talking to customers every single day. Or as often as like is feasible or reasonable. I mean, obviously different industries or types of products maybe don't lend themselves to that. Maybe if you're doing like government tech, maybe it's more difficult. I don't know. So it just depends. There's a lot of nuance there, but in general, you want to build with your customers, not for your customers.
Yeah. So what are some other issues or pitfalls that you see that are common in startups that fail or doesn't do as much good as it should be?
I think outsourcing a lot of things early on is bad. Again, the whole premise of a startup is a hypothesis, and you have to learn very quickly. If you're outsourcing development, that's not good, because then you're the one talking to the customers and getting the feedback and learning.
Yeah.
Now you can't be the one implementing all that.
Right.
Also, if you're outsourcing, the person you're outsourcing to, they're probably building 10 other things. Yours is not a priority, right? They're not going to work on a weekend. They're not going to work till midnight on your product. They've got other things going on. They'll do it because you're paying them.
Yeah.
The other thing is just teams that don't have the grit, because you're going against the grain. You're doing something that's never been done before. You're disrupting a market. And with that, you basically are going against a whole generation of people that think this is the way to do things, which means you better be prepared for a bunch of rejection and getting the door shoved in your face every day and hearing no every day. And so if you don't have the grit and the tenacity and the resilience to just keep moving forward, then you're not going to make it.
No, I think that's like beautifully said. I mean, it's all about like perseverance, right? When it comes to like entrepreneurship, you're gonna face every single time rejections. I mean, look at Steve Jobs. Like, he was removed from his own company, but he didn't give up. Like, he was investing in Pixel and different other companies, and then he brought those companies when he was back, and he became billionaire off of that, right? So it's all about, like you said, grit and perseverance. And okay, we talked about the pitfalls. When you are looking for funding a startup, do you still look for the right pitch, or do you don't even care about the pitch? You care about the team, about the product, or about what they're trying to solve?
Team is number one. And just going back to this point of the grit and the resilience, I was just interviewing Nick Huser, the founder of OfferUp, co-founder of OfferUp, just like last week. And I asked him, I'm like, what was the most difficult part of your journey? And he said, what he said was really funny. He said, well, the reality is people ask me all the time, and you know what? It just never gets easier. The whole thing was hard. Every single piece it just kept getting harder. And so he's like, I can't even point to a single moment. It just never got easy. And that's the reality of the startup journey. It's like, there's never a point. That's like, I think most like early like younger founders, and like I know when I was starting out, that's what I thought too. It's like, yeah, you get to a point where you're like, you climb the mountain, you could take a deep breath, you're chilling, you're good.
Yeah.
And that's a misconception. There's never such a thing. If you think that you made it, it's over. That's the beginning of the end.
Right.
That's why Jeff Bezos would always say like, day one mentality. We need to operate like it's day one and have the same hunger like it's day one. Yeah. So going back to the question, team is everything. When we're investing so early, a great team will be able to iterate quickly. They'll be able to learn quickly. They'll be able to find the market opportunity. They'll be able to scale the company. They'll be able to hire and attract high quality talent. They'll be able to raise more money, which they're going to need to scale. They'll be able to go sell. They'll be able to build. So that is everything for us.
I see. So that's what you look for, like the team. And you said team, like what about the solo entrepreneurs? Do they still have chance, or do you recommend like them having some sort of partnership?
We have backed maybe just one like solo entrepreneur, but the reality is that it's so difficult that you typically want to have a co-founder. And part of it is self-awareness, like knowing where are your weaknesses and having somebody who can complement those. But part of it too, from an investor perspective, is like, why are you doing this alone? You know this is difficult. Were you not able to convince somebody to join you?
Yeah.
Right?
Yeah.
It's like almost a skepticism. It's like, why weren't you able to convince somebody to join you?
Yeah.
Because if you couldn't convince somebody to join you, are you going to be able to sell this product?
Yeah.
Are you going to be able to convince investors to give you money? You know, so like that's part of it.
Yeah.
But I'm not saying it can't be done.
Right.
And it has been done many times.
Yeah. Do you believe in this phrase, sell before you build?
Yes, 100%.
I go to a lot of networking events, and a lot of people have their own startups, but the startups are just not like startups, but they are just like building their products on their side hustle, like a side gig, and they're doing it by themselves. I feel bad for them, because now that you have said everything, from our start of our podcast, they are doing everything wrong. I feel bad because, you know, like you said, I mean, forget about building the product. That shit is not at all useful. Like, you know, build an MVP as quickly as possible within an hour a day, reach out to the customer, be with them, then develop the product with them. That's the key. That's as simple as it can be, right?
Yeah, let me break it down another way. So building a product, spending 9 months building a product for your customers is like spending 9 months studying the game of basketball. And then after 9 months, you step foot on the court and it's your first time playing.
Yeah.
You're not going to be good.
Yeah.
You have to get those reps in. And even for us as a fund, when we were first starting out and we were just hosting events, and the pandemic hit, my co-founder said, hey, we should start an accelerator. And I was thinking, we can't run an accelerator.
Mm.
We never started a successful company before. We never worked at an accelerator or a fund.
Yeah.
And then I thought about it and I said, well, if we never launch an accelerator, we're never going to learn how to run one.
That's true.
And then we launched it.
Mm-hmm.
And then we ended up helping 40 companies raise over $13 million in 2 years. So I think that you need to get those reps in, and actually building something and trying to sell it is getting those reps in.
I see. Now that you have hosted so many events, you have seen a lot of startups sometimes be successful, sometimes failing. Like out of all these startups, like you getting like thousands and thousands of pitches, like you might have seen. Like what do you can see, like from the get-go you can see like, okay, this will work, this product will work, or this will not work? Because now you have to be very strategic about, you cannot just invest in anything, right? You have to have some sort of criteria, right?
Absolutely. And I mean, I hate to go back to it again, but it's all about the people. Like when I'm meeting with somebody, I'm trying to evaluate, does this person have what it takes? Do they have the grit? Can they sell? Can they build? Are they resourceful? Do they ask? Do they have a great sense of curiosity? That's important. Do they ask good questions? Are they constantly trying to learn? Are they a quick learner? Like that's what I'm evaluating. I'm not thinking, is this product going to be the future? Nobody can predict that. Nobody can predict market timing. Nobody can predict the future. And regardless, as a VC, even some of the best VCs, 5 out of 7 companies they invest in never make it, or whatever it is, 8 out of 10 never give them great returns, right? So there's going to be failures anyways. So the only thing that you can, at least from my perspective, the only thing that you can like anchor on is the people. And that's what I'm evaluating.
No, I think the message is clear on that. I do also want to talk about AI. I mean, we have talked about VC and startup, but like AI is big into what you do, right? And you have been following the trend closely and in it. And you have talked with a lot of like founders, co-founders, and a lot of like big CEOs. So what are you seeing the trend as far as where is the actual AI industry is going towards? Are we going to be going towards a lot of because there are so many startups now. So if you were to accumulate everything, will we be achieving some sort of like AGI in like few years, or is that like far-fetched dream still based off the trend that you have seen so far?
I have no idea. Honestly, everybody has a different definition of AGI, and I'm definitely not the person to predict when we're going to have AGI, if we're going to have AGI ever. I have no clue. I mean, it's funny. We get like as a VC, I feel like VCs get asked these questions all the time. Like as a VC, like you can't predict the future, If anything, this question would be way better suited for somebody who's like a researcher, right? Like an AI researcher. What we in VC are often doing is we're just evaluating people and like market opportunities. And what I can say is that there's going to be some game-changing companies that get built within AI, both on the application layer and on the infrastructure layer. And I think we're going to see technologies that make it significantly cheaper to do day-to-day tasks, to build a company, to hire, to, we're seeing with agents, right? Agents are replacing people. And so I have no doubt that AI is going to disrupt every single industry, and it's going to be absolutely massive and likely bigger than what the internet did for the world. But I have no idea where it's going to be in 5 years. I don't even know where it's going to be in 6 months.
Do you also invest in a lot of like agentic AI startups?
Yeah, we have invested in a company called Agentuity that allows enterprises to deploy their own agents without building infrastructure. So it's a very easy way to build a new agent. And the team actually has built many of their own in-house agents, and they use agents regularly. It's pretty cool.
Oh, that's crazy.
Yeah. So we funded a lot of companies at the AI application layer. We have one that's using AI to accelerate pharmaceutical development. We have one using AI to automate physical natural gas trading. And we've got many on the infrastructure side as well.
So let's talk about it. I know that you said that we cannot predict AGI and where the industry is going, but there must be something that you are like super excited about, like any type of industry or any type of like development which can hugely benefit from AI?
There are so many.
Yeah.
I think the more outdated the industry and the more data that's involved, the more opportunity you have. So what I really like about this company, PathPoint Labs, that we invested in, which is the one that's automating natural gas trading, is that even today, the physical natural gas traders are going into the trading room and they're looking at physical maps of the pipelines. There's over 200 natural gas pipelines in the US. And they have to look at these physical maps and they have to make all their trades by 11 a.m. and they're using Excel to manage all this.
But what do you mean by trade? Like, why do
they're buying here and they're selling here? The whole goal is to get it from point A to point B, and they have to figure out what is the most efficient way. How can I make the most amount of profit getting the gas from here to here, from Texas to Arkansas, or whatever it is,
Yeah.
And that's what they're doing every day. But they're doing it with physical maps and they're doing it with spreadsheets. So AI is so much better suited for this because the best traders can only look at 2 maps at a time because it's overload of data, right? 2 pipelines at a time.
Yeah.
And so AI can take a look at all 215 or whatever it is pipelines and then make the best trades way quicker than a human can. So that's just an example. But I think any industry, healthcare is going to be a big one.
Yeah.
I can even see like mining. I think accounting and bookkeeping. I think, there's going to be a ton of disruption and a ton of opportunity and increase in efficiency because of AI.
Totally. Do you think that there's going to be more startups or more consultancy? And why I'm asking this question is because if you see carefully, like, of course, there are like a lot of startups that are building these agentic systems and AI agents for specific industries and domains. But there is also like a lot of demand of personalized tools for different companies. So like each company has their own way of doing things. If you were to create a startup which you think that can work for every other company, I think you might be mistaken. But whereas a consultancy can manipulate their strategy based off of different companies that they're working with. So do you foresee like more people opting this consultancy route for AI, or no, there's going to be still hugely more startups?
I think that AI startups need to also be consultants because whoever they're selling to, unless their product is turnkey, where somebody it's product-led growth, where somebody can go on their website and immediately start using it without needing any guidance, which is rare. That's very rare.
Which is ChatGPT, Gemini.
Exactly.
Right?
Yeah, there's a few products in that category.
Yeah.
Everything else, they need to have like a services arm or a consultancy. And that's how they're going to acquire their customers, especially if you're selling to enterprise. I think every AI company selling to enterprise needs to have like a services division, at least for now. Maybe eventually that'll change.
Yeah.
But I think there's such friction to adopt and so many hurdles to overcome.
Yeah.
Because you're changing consumer behavior.
Yeah.
Right? These people have their day-to-day work, they have their processes, and you're completely disrupting that.
Yeah.
And ultimately it should be a net positive.
Yeah.
But you have to get over that hump.
So you're saying is that it's going to be more like a hybrid philosophy or hybrid system, wherein you have to kind of handhold your customers until you get to the final outcome, which is going to be much more robust and easily usable.
Yeah, and I think a lot of great companies have been built this way.
Yeah.
Like when you think about Stripe, I don't know if you know the story of Stripe, which is now, forget what the last valuation is, but I think it was worth like 70 billion or 90 billion or something. And in the early days, Patrick Collison and his brother, they their first few customers, they were literally like working from the customers' offices. And they were integrating lines of code to embed their product within their customers' workflows. And that's why they had to work from the office. And it was better for them because like it gave them the opportunity to be talking with their customers every day and be learning from their customers every day. So this is how a lot of great things start. And oftentimes you do need to have the more technical the product or the more difficult to integrate the product, the more of a services component that you need to have, in my opinion.
Yeah. What's like one advice you would give to like young entrepreneurs and people who are just doing their startups, apart from what we talked about, to be successful in the startup field at the same time, like this quickly evolving AI revolution that's happening?
Yeah, I would say start before you're ready. Stop waiting, stop researching, stop strategizing, jump into the arena and start getting those reps.
Yeah.
Build something today, launch it tomorrow, talk to your customers, and keep doing that every single day.
Yeah. You have done podcasting yourself. How does it feel to be on the other side, by the way?
It's fun. I like it.
Yeah, no, you're doing great, man. I think all the answers are like spot on. But like, what have you taken from your podcast journey that you still use it now in your day-to-day?
I had the pleasure of interviewing Harry Stebbings earlier this year, and he is probably one of the most prolific podcasters of our generation. He's 29 now, and he founded 20 VC when he was 18 out of his bedroom, and they're getting like nearly 40 million downloads a month. He built his own VC fund. They're managing $850 million. And when I was interviewing him, I was in London in late April interviewing him at an event. We had like 100 people there. And I asked him a similar question. And he said, I think everybody should start a podcast. I think everybody should learn how to interview. It's such an important skill. And like, when you think about it, it ultimately comes down to asking good questions. As a VC, that's my job. I have to meet a founder and ask them good questions to try to get to the bottom of like, do they have what it takes?
Yeah.
Do they have a unique technology? What is their competitive moat? Are they going to be able to scale this? Are there any red flags? Right? And it's all about asking questions and then asking follow-ups and digging deeper and trying to see if things match up. And I think having a podcast gives you that skill set because you're interviewing somebody and you ultimately get better at asking the right questions and follow-ups and all that. So
that's a really good
so
answer.
Kudos to you for starting a podcast.
No, I'm learning a lot from you actually. I have like second to last question for you. As a managing partner of OneSixOne, what's your like day-to-day look like?
Chaos. Every day I wake up and it's from the time that I start meetings or calls, it's nonstop with emails, nonstop calls, meetings. But every day is different and every day is so much fun.
Yeah.
I'm talking to founders, trying to learn about what they're building, learning about new markets. I'm talking to investors. Oftentimes, these are folks that are incredibly accomplished, maybe built and sold a company or had an incredible career. I'm learning from them. I'm learning about their journeys. I'm trying to see if they're interested in, being a part of our community and being a part of our journey. And yeah, every day is filled with learning and connecting with very ambitious, intelligent people.
Yeah.
It's a lot of fun. And I get to do a lot of like physical, like in person, just meeting people face to face, which I really enjoy. It's like, I don't have to be at a desk behind a Zoom screen every day.
Yeah, no, I'm actually getting inspired from you. First of all, I gotta say you have an incredible energy. I love the enthusiasm that you have, even for the startups that you mentioned, to all the different things we've talked about. So what's in the next doc for like OneSixOne? Like what's the vision for the next 2 to 3 years?
So we're about to open up our next fund in October. The plan is, have the first close next year, and then the final close within the next.
What do you mean by first close?
So that just means that we do like the first capital call. So anybody who committed to the fund, they have to actually wire the money in.
Oh, I see.
Yeah.
Yeah.
So this is what we're planning, and then just continue to grow by hosting more events. So like this year, we're on track to host over 70 events around the U.S., bringing in some very notable speakers like the founders of Auth0, Rover, Square. And so, just raising the bar on the events, getting higher quality folks in the room, helping more founders meet customers, raise money, and just building more of a community presence and getting more content with all the events that we're doing.
Yeah.
I think that we haven't really seen a content-first, community-first VC in the US, and that's what we're focused on building.
Yeah. And you guys are based off of Seattle, Miami, and New York, right?
That's right.
Yeah. No, I think I love that. And that's what I, in the podcast journey so far I always emphasize more on like, what are we doing for people, right? Because with startups, you like there's so many people who are doing B2B, and that's okay. That should be done. But at the same time, what is in it for people? Because ultimately, I'm seeing a lot of capitalism ruling into it, and capitalism is nice in general, but at the same time, if it's not benefiting people, if it's not solving people's problems, then it's no use of all these products, fancy products that we have. And so I'm really glad that you are taking it head on and actually building a community, and then from there selecting the right few. And so kudos to you.
Yeah, I think it's all about playing the long-term game. Like I'm somebody I don't know if you've ever heard of the Strengths Finder 2.0 assessment. Yeah, so I took that years ago. I had to take it when I was in college for a job I had.
What's your top 5? Do you remember?
Yeah. Well, I see if I can remember exact order, but number 1 is actually competition.
Ooh.
I'm incredibly competitive.
Yeah.
Number 2 is futuristic,
mm-hmm.
which I think is very synergistic with being a venture capital.
Yeah.
I believe number 3 was positivity.
Mm-hmm.
I think 4 was woo, winning others over.
Yeah.
And then 5 may have been communication. I think it's always important to think about the long term. And I do that to such an extreme, to the point where sometimes I completely neglect the short term because I'm just so focused on the long term and the big picture.
Yeah.
And I mean, I think that's, in a way, that's how we've built OneSixOne. It's always been, how can we give value first? How can we create value? Eventually, we'll earn our right to get access to great deals. We'll earn our right to get into the best deals and to work with the best founders. And eventually, they're going to want to work with us because of the ecosystem and the community that we're building.
Right.
But it's a very long-term game. Yeah. And that's why we're hosting all these events that, in a way, it really helps early founders get plugged into the community, learn how to go 0 to 1, meet their first investors, meet their first customers.
Yeah.
And that's basically everything that we've been doing at OneSixOne, is just focus on the long game and making it easier for people to break into venture capital and startups.
Totally. I mean, I cannot agree more, because if you think about it, there's going to be more than 1,000 startups, but out of those 1,000 startups, in the long run, there's going to be only 5 or 6 remaining, and those 5 or 6 will be the most valuable company. That's why they call it most valuable player or most valuable company, right? Because you have contributed so much. And I think it might be Elon Musk or somebody said that if you want to make $1 billion, help billion people.
Yes.
Right? So think of it from what do people want, what's not what's something that you want to showcase to the world, that, hey, I want to change the world. Sure, you want to change the world, reach out to people, to your point, right? Validate what do people want and build on that, right?
Yeah, and to your point, venture capital is ruled by what's called is defined by what's called the power curve, the power law, which is that just a few of your companies are going to return the majority of your money. And it's exactly what you're saying. There's only a few MVPs. There's only a few top performers, or as we call them, outliers.
Yeah.
Right? And so if you can get in on those outliers, it's okay if you only shoot 1 out of 10 or 2 out of 10, because those are going to return your whole fund and more. Right? Yeah. Jeff Bezos once said, if you have 10% odds of success, but success means 100x outcome, you should take that bet every single time.
Absolutely.
And he's totally right. Yeah. And that's what venture capital is all about. It's about the moonshots.
Yeah, no, I like that. And, I know that you have to go, but from the start to now, you have laid out all the secret of how one can have that most valuable company. And so I'll leave the audience with that. But I do wanted to ask you one last question. How do you have such a perfect jawline? I'm jealous, man.
I work it out every day.
No way.
I'm just kidding.
Do you do some
genetics?
Exercises? No, man, that's pretty impressive. But overall, Pablo, this was an amazing, short but really quality discussion, and I have learned a lot, and I hope that audience have learned it too. Thanks a lot for coming to the show.
Thank you so much for having me, Gaurav. Such a fun time.
Yeah. To your audience, thanks a lot for tuning in. I hope you guys gained some valuable lessons from Pablo. If you guys have any comments, feel free to leave in the comment section. And also, if you want somebody that I should bring in the podcast, please let me know. As always, take care.